Today we will have a video that you probably did not expect to actually happen on this channel. We will go through Dash, an old project, an old token that was in top 5 of all cryptocurrencies in 2014 and in 2017 as well. We will go through investment thesis of a Dash, and I will share a couple interesting updates. On top of that, we will discuss Merlin chain and the fact that they're launching soon. And difference in terms of the approach. It's very interesting from investment point of view, and it's very interesting what type of approaches are actually being used on the market by different projects in different narratives in different sectors. A bunch of insights regarding both of these projects. Let's actually begin. Like this video, subscribe to this channel, and let's start. Let's actually start with Dash. Why I am talking about Dash? A channel that always talking about meme coins and things like that, is because investment thesis is very important for us. Very important to understand. At the same time, there is some very interesting technological updates that are happening for Dash. Yesterday on the conference, it happened that I sat for several hours with one guy who is a Dash maxi. He is a software engineer himself. He was developing blockchains. He was setting up parachains on Polkadot. He was developing a bunch of Ethereum smart contracts. He was even working with things like Zilliqa. And I was onboarded into the things that are happening on Dash, specifically Dash platform. I would like to tell you about them because I did like the technical implementation of the whole thing. I did like what is happening there. Obviously, if they would be able to launch on time as well. And we will also discuss investment thesis because it's important for us to figure out what do they have with investors. Other parties that actually have maybe some of the money locked up and they're looking for ROI. Other market makers, other marketers that are actually going to pump this thing. Will the flow of users essentially come into this thing as well? But we were mostly speaking about the technical part. This is something that excited me a lot if they would be able to launch it into the marketplace. The thing that we will go through is actually Dash platform. Dash platform is a layer 2 on Dash, which is a fork of Cosmos Tendermint compatible with EVMs, Ethereum virtual machine, and chains connected with EVMs as well. You can use Solidity when developing on it, as well as some other engineering development languages. What essentially is very interesting about this solution is the fact that they actually are providing interoperability between all of the Cosmos ecosystem because they're essentially a fork of Tendermint. They are compatible with EVM-based blockchains. They even would be compatible with Solana as well. And it's like this vision of decentralization actually done right because, frankly speaking, to be honest with you, most of the blockchains that are on the marketplace currently, even things like Sui, they are not solving infrastructure issues at the core of the issues. They're just masking them, trying to provide some different solutions, and they have a bunch of money with VCs pumping funds into them, but technologically, unfortunately, they don't solve the main issue, the main paradigm, and the main issue that each and every layer 1 is actually trying to solve, and layer 2 as well, is decentralization, security, and speed. How to make sure that actually all 3 of these things will be present in layer 1. To make it very comfortable and convenient for engineers to actually develop on it and for users to have incentives to understand why it's actually nice to use a solution like that. 2 main things that I see are prominent and very interesting in Dash platform, which is a Dash layer 2, are decentralized API and data layer that is actually on the blockchain. We don't have anything like this currently on any of the blockchains. The issue with the data layer is because on most of the blockchains, if you actually want to put some data on the blockchain, you most likely won't be able to do that because of the fact that it's actually expensive, it's slow, all the nodes they actually need to agree on the things that you're putting on chain, and usually the solution that is being used is that data is being stored off chain. So it's essentially something that interferes with decentralization in the first place right away Because if something will be happening to a centralized server, your data is gone and your dApps, your NFTs would essentially not work as well. Something that we have on Ethereum, for example. NFTs like punks and bored apes, they are hash links to the images that are being stored on a centralized server. Something happens to a centralized server, you cannot retrieve your image. And this is a piece of centralization that actually works inside a decentralized blockchain, which pretty much removes the concept of decentralization in the first place. And with oracles on Chainlink, we actually need to have a third-party provider, a Web2, to verify data. With the implementation of Dash platform, this layer 2, if they would actually be able to launch, they will have a decentralized oracles working in a decentralized way because of the fact that they would be using data contracts, not smart contracts, and they would be able to store the data on the blockchain and not on some centralized server with a need of third-party provider to actually check out and verify information as well. And decentralized APIs is actually something huge for the engineers as well, because I want you to understand this. What are they doing? They're essentially bringing a proper Web 2 interface of microservices into Web 3, because currently how this whole thing works, there are no needed microservices implemented on blockchains. Like some blockchains, they might have some of them, but there are no chains that have like all of the tools that you actually would want to use, all of the tools that you're using when you are developing for Web 2. And what Dash platform is actually claims to do is to develop this solution that's going to be decentralized, fast, and secure, and anonymous at the same time, with the implementation of Web 2-like microservices. So it's a pure leap from Web 2 to Web 3. It's how Web 3 should be developed and implemented in the first place, if they would be able to achieve that properly. With something like this in place, software engineers are actually getting a set of tools that they need to develop decentralized applications exactly the same way as they're being developed in Web 2. It's just that you won't have a need for a centralized server, centralized third-party provider to approve the data from real world. Everything would be able to work in a decentralized manner, following the way how it was coded without a need to actually have the third-party provider, because most of the things that we have currently, success and decentralized applications that most of them are using oracles, they're still connected to certain type of Web 2 data provider. And what they claim to actually do is to remove this part, which technologically definitely would be a huge advancement in the space. Right now, there is already a test net live. And you kind of can invest into this technology as well, because there are Dash tokens on the marketplace. They're being mined on a daily basis. You can buy them if you would essentially believe that they will be able to launch and they will be able to work properly. And probably if this thing will get an adoption, if it will essentially be doing the things that they say it will be doing, it will definitely surge up in price. Engineer I was talking to is obviously very bullish on the thing, and he tends not to call himself Maxi, because he was saying that I was asking multiple engineers, multiple people, please go check this out, check out if it has some issues, maybe I'm not seeing something. And most of software engineers that he asked actually told that it looks like something very interesting, and he sees more and more engineers essentially getting into something like this. And he is saying that there is nothing similar on the marketplace currently. He might be biased as well. In crypto, you often need to follow developers, follow software engineers to actually capitulate on new technologies. If you are seeing that software engineers start to appreciate certain things, probably you would have to wait for some time, probably need to have talented teams on the end of the point of view of marketers. You probably need to have users actually using the product in order for them to add a bunch of liquidity and the token to appreciate in value. But a general rule of thumb, if you see the engineering activity actually increasing in certain ecosystem, it is usually a sign that ecosystem might be appreciating moving forward. But we are an investment channel. Let's actually figure out investment thesis for something like Dash and Dash platform as well. The issue that we have is that Dash as a project is being run by DAO currently, a decentralized organization of people who are actually owning and running master nodes, essentially establishing the work of the chain at this stage. And the team that is actually developing this Dash platform, which is layer 2 on Dash, they're being funded by the owners of the master nodes, so by the chain overall. They are declining some of the marketing propositions and essentially giving way less budgets to marketing, focusing on the product currently, which definitely makes sense. At the same time, they don't have investors. And they don't actually allow for investors to come in because investors would want them to emit a large amount of tokens, and they don't want to actually be doing that. But from the investment point of view, it might be a bit weak because we do understand that there probably is no entity that invested a lot of funds and actually wants to capitalize severely on this amount of funds that they invested. Something we have in things like Sui and Arbitrum, and this is one of the reasons of why I'm actually talking about these projects as well, is because I do understand that we would be able to piggyback, to dig right these VCs and these market makers who are working on these things, who are invested into these things already, because they would be looking to make an ROI, therefore they would be looking to pump these things moving forward at this certain stage of the market, because they spent multiple hundreds of millions of dollars into this thing. We don't have something like this for Dash at this stage. The solution was being developed for 7 years already. Me, from software engineering point of view, I would say that it might be a bit long. And following the fact that community is essentially waiting, supporting the whole thing, I do believe that it is a community of all the people, so they would be alright with essentially waiting some more time as well. There are some estimates that mainnet for the solution should come around September of this year, so in 5 months from now, right? But in software engineering, usually these things are actually getting delayed. On top of that, we do understand that there should be a bunch of back holders that were buying Dash at like $300, $400, $700. Most of them probably already sold it because it was just a huge capitulation to time. At the same time, we can't diminish the fact that people who are mining Dash might be selling it, and at the same time people who are back holding from that time, they would want to break even to sell, just because the pain inside is so huge at this stage for holding their Dash for years. I do see investment thesis and situation quite similar to something we have on Luxa, because there are no investors there who are actually looking to get their ROI anytime soon. There seems to be not a lot of marketing efforts as well. They don't have a market maker following the volumes that they essentially show on CoinMarketCap and on different exchanges. Maybe they have one, but just the guy who's controlling the spreads on different exchanges and nothing else. And the issue with this type of projects is that they are solely relying on product market fit. And listen carefully, it's very important. When we are relying on product market fit, what we are actually doing, we're shifting from Web3 type of investment, from these garbage, attention-based, fugazi things with zero utility just surging up. We're switching from Web3 to Web2 type of investment, where things only mostly appreciate in value where there is a product market fit for them, when they are generating revenue, when users are actually using them, when they are creating certain value. So it's harder to actually trade these things and expect for them to go in value based on expectations, based on attentions, especially if it's older projects in the first place. The fact that they are older might help them because they definitely had more time to build the solution in comparison to all the layer 2s on Bitcoin currently, most of them that just had like half a year to build a layer 2 solution, right? And Dash, for example, was building their layer 2 for 7 years already, and they're not launching anytime soon. So what I think you need to understand, and in general with all these older projects as well, if they don't have a party of VCs that are interested to make an ROI short term, if they don't spend a lot of money into marketing, if holders are focused on tech, and it seems like engineering teams and the founders of the projects are also focused on tech only, that means that there is a huge risk in crypto investing into them because they would be appreciating in value only with product market fit. And we have something like Polkadot, which is a startup that was not able to reach product market fit, and it's still at the crazy valuations. Like the ecosystem of Polkadot at this stage, it does not have a lot of things. Like fair value of Polkadot might be at 20 cents, and yet they were able to pump this whole thing up just because there were investors at play, market makers, and all the marketing teams essentially doing their job and believing into the whole thing as well. Very important to understand that the fact I'm saying that it's risky to invest in Dash, I would say something more as well. I do think that it's actually less risky to invest into a blue chip meme token than investing into Dash at this stage. And you have to understand what I mean by risk, because if you would be investing into Dash, most likely your money will not go to zero, right? And with something like meme token, they can easily be going to zero. They can just rack any time. Well, if the meme token is a blue chip, it's definitely going to do better, but you'd have to stand the volatility and other things like that. I'm talking about risk in terms of opportunity cost. Because if you are sitting through the bull market in something that actually needs product market fit to surge up, something that won't be pushed as a bubble by VCs who are looking to make ROI on their investments, something that does not have marketing teams and does not have market makers eager to push the price of the whole thing as well, it's generally riskier, because at least if you're on the same boat with all these people, yes, you understand you would probably get dumped on, but at least you would know that before the dump, they will have a pump, because they need to create liquidity. They need to create liquidity in order to take profits, because of the fact they won't be able to take profits on the current market. There is not enough liquidity. It was 0 cents for them to actually be investing hundreds of millions of dollars to be taking profits at this stage. There is not enough liquidity. And on top of this, there are some bullish updates actually happening for Dash. A company like Bitmine is actually investing into a hardware to mine Dash in 11th standard of the hardware to actually mine Dash, which is quite interesting. There is some interesting from Binance and from other sexes, and from one point of view it might tell us something. From other point of view, we have to understand that these things, these organizations, these structures, they're pretty much just larger, so they have to play a bit of different game. Their game is to spread the resources over the market and wait for the things that would essentially surge up, just to capitalize on them. So it's not vitally important for them to be right on a certain peak, because they often might have unlimited liquidity. Their thing is to not actually miss something and not allow for their competition to take a market share on something new. For example, something that OKX actually did with ordinals. They are the only exchange that have functionality with ordinals, and they will have it with runes, and they're taking a huge market share from other exchanges, because other exchanges, they were not able to implement something like this on time. This is the game they're playing. It's a different game that me and you as retail investors essentially are playing on the marketplace. So I wanted to share this thing about Dash because it was a very, very exciting conversation yesterday, and I do actually like a lot the things that they're building, the things that I was exposed to yesterday. The main thing is whether or not they would be actually able to launch in mainnet, and even on top of that, once they would be launching in mainnet, they need to attract engineers in the first place. Engineers, they're being attracted currently, but they would definitely need more and more people, and then engineers would actually need to have some time to build some projects, and only then they would be able to attract users and utility and things like that. And something about product market fit, which is very, very interesting. Do you think that Solana founders were actually projecting that their blockchain will be used for trading of Memecoins with these stickers that are actually being traded on Solana Memecoins at this stage? I don't think that they were actually projecting, starting to develop Solana, I don't know, like in 2019 or something, that the whole utility, the product market fit of their blockchain is actually going to be trading of degenerate memes. Who actually plans for that? Like, you could not actually have had planned this in the first place. Zero chances. And a comparison to investment approach that I actually wanted to share is Merlin chain. I was doing a video on Merlin chain. If you don't know, Merlin chain is a Bitcoin layer 2 that actually is launching tomorrow. And I know some things from the technical implementations and things like that. One thing I actually will tell you, one thing I might share with you, I can share, is that all of the Bitcoin layer 2s currently, they are not layer 2s, they are side chains. They don't achieve transaction finality on Bitcoin. They are not like Ethereum. They're pretty much just Ethereum layer 2s with a bridge functionality to bridge Bitcoin assets into the layer 2s. Nothing more, nothing less. We have to understand this. And what they're doing currently, they would essentially be launching a race for TVL, because this is the main thing that they're going for currently. They need total value locked on their chains, they need active users, they need to attract liquidity in order to be able to be interesting for projects, in order to be able to show some volumes, to raise some more money, and essentially increasing the market cap as well. We will have the launch of Merlin token, and something that's happening that I wanted to show is that Merlin token is actually available to pre-buy on BitGet, which is a very, very interesting functionality. I'm seeing it personally myself, like first time between all of the projects that I've ever seen and were launching. So you can actually buy Merlin token only on BitGet, on the pre-market. The question is, would I actually suggest to be doing that? I'm not sure. I'm not buying myself, and there might be a chance that you would already be buying at higher prices, at a higher valuation, but no one knows. Some people are saying that total value log that Merlin chain is reporting is actually scam in the first place. They don't have that much liquidity locked on the chain. Just to update, they actually state they have $3 billion of liquidity on the chain, which brings them somewhere to top 5 of all the chains that are actually available on the market currently. So just something I wanted to expose you to. If you would like to participate in this, just to check out this thing, there is a link in the description under this video to sign up on BitGet. You will be getting up to $30,000 bonus, and essentially it's an exchange. I'm actually partnering up for quite some time for my other businesses as well. I've been in their Dubai office, a very, very nice, stable exchange to use as well. Finalizing the whole thing, why I actually mentioned that I would like to discuss the difference in investment approach and investment thesis. In the case of Dash, we have something that is mainly focused on technology in the first place, with the holder based focused on technology, and lack of marketing, lack of fundamentals to actually pump the price of the token. With Merlin chain, we definitely have market makers. We have marketing teams working very, very hard. They are launching on most of the exchanges they want, to pretty much be able to just pump this whole thing up. There is already some meme token game happening on Merlin chain in the first place. And the thing with them is the tag that they have is quite weak. Quite weak at this stage. So you can definitely see the difference. One thing is focusing on the tag and lacks in marketing, and maybe marketing will unleash at a certain point of time, but no one knows. Second thing is not focusing on the tag much, but they're pushing on marketing, they're pushing the price on the token and things like that. So from investment thesis, investment point of view, crypto investment, right? You might be safer actually getting into something like Merlin chain. I would not actually be suggesting buying the token right after the launch. I still see us with the Bitcoin halving and Bitcoin ECA and with runes launching and all these layer 2s launching and things like that. I still see a possibility that it might be sell and use event. Then this space would eventually wait until certain projects will start to emerge, and they will be building for several months. And after that, after they would already have something, the price of these assets would actually start to surge up and the market would start to appreciate. So I would say that your risk reward might not be quite there at this stage, speaking about Merlin chain, but after several months of down price actions, scoop some of it up on the correction or scoop some of the ecosystem might be a very, very nice thing. They have a Memecoin, which is called Hoo as well. May be interesting, maybe not. We will be seeing what actually will be happening with this chain as well, and Bitcoin ecosystem as the space as well. I see a certain percentage that it will be selling the news event, but I'm exposed myself and I'm just waiting. Thank you very much for watching this video. I will be seeing you tomorrow. Bye bye.